Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, Anthony Power and I are joined by Sheldon Bennett, the CEO, and Steve Eliscu, the COO of DMG Blockchain Solutions. They just came out with Q1 earnings, and we wanted to get an update on the numbers and their outlook and strategy for 2025. That's what we're going to be discussing in today's podcast. Before we get into it, take a second, smash the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below if you're currently holding shares of DMG, what you thought about their Q1 results, and outlook for the remainder of the year. Now, with that being said, let's get into today's video. Okay, guys, so that's right. Sheldon Bennett, the CEO, Steve Eliscu, the COO of DMG Blockchain Solutions, back on the channel to discuss their recently reported Q1 earnings and provide some insight as to their plans for the upcoming year of 2025. So, guys, welcome back to the channel. Thanks for making the time.
Thanks for having us back.
Of course. Hey, so I know you just reported Q1 this week. I wanted to kick off with some of the high-level numbers, kind of the highlights, in your opinion, from this most recent 3-month period.
I think there's quite a few highlights. Financially, we're doing quite well. I'll let Stephen speak to that. But operationally, which I normally speak to, we had a strong quarter. One of the bigger highlights was STC, our digital custody company based out of Alberta, where you are, became fully licensed and regulated. So now we're able to take on third-party assets. Originally, we could only take on first-party assets, which is us, ourselves. So we're pretty excited about that. We think that's going to be a major part of our new revenue coming in this year. Not sure what that number is. We get asked all the time, what's it going to be? As a brand new company, it's going to take a little while to prove it out and get people to trust us with their digital assets. But when you see what's going on in the world, especially one of the largest hacks in the world happening, I think a lot of people are looking at using a digital custody, a qualified one, not just somebody that said, I'll look after your wallets for you on an exchange. So we think that that's going to be great. As well, we made a lot of progress in the background that people don't see in our software stack, especially with Fireblocks and its ability to work with Terra and with STC. We've announced that we're working closely with Bosonic. We're an investor in Bosonic a long time as a custodian on their cross-custodian platform. I think there's probably a few more things going on. Obviously, we announced on the AI front in the last few weeks here that we have procured or we're under MOU on a 10 megawatt AI data center. It is SCIF rated. We call it military because it's easier to understand than SCIF rated. So basically, it was built and designed to a level whereby agencies that are looking for certain levels of security would have that within that data center infrastructure. 10 megawatts is not a small amount. If people have kind of been following the AI stories, you'll know that, it's depending on what you're doing, greenfield, brownfield, you're probably $6 to $10 million a megawatt to build infrastructure. And then you have the GPUs and infrastructure that, that goes in after that, all the motherboards and fiber and so on. That's probably another $30 million, maybe 40, depending on getting the latest version. So, you take a look at 10 megawatts and it's kind of like $500 million. So it's, people can throw around numbers in Bitcoin. $500 million could give you, tens of megawatts, 100 megawatts or so of Bitcoin mining, maybe more. If you look at Bitcoin mining, the cost of miners, latest generations, probably $2 to $2.5 million a megawatt. And your infrastructure shouldn't be more than, I would say 200K a megawatt, but some people say 400 or 500K a megawatt. So when you look at the comparison, I mean, the capital intensity of AI is much more extreme. And then just the ability to put on 10 megawatts of AI, it's sort of a $500 million investment is significant. And every one of our peers in general, there's a few that aren't, are trying to figure out how to get into this business as well. We think what we've done really catapults us ahead of a lot of other people. When you look at a new build out, you're looking at a year and a half, 2 years, just the physical infrastructure, which we found. And then, we still have the supply chain of getting the GPUs and the motherboards and the racks and the fiber and everything else that you need. So I think that that's a big gain for us, such a, you know, smaller company in the world of crypto, being able to move this quickly into AI. I think it's a big deal for us. Stephen, if you have some comments.
On a revenue side, we nearly doubled to 11.6 million. This was us finally getting our T21 fleet up and running as of the beginning of the December quarter. And that allowed us to grow our hash rate by almost 2/3. And that reflected in terms of fall through, in terms of what people often call gross profit, where it kind of reached back to historical levels. And when our expenses, one of the things we're very proud of is very well managing our expenses, even with having software, even with our systemic trust subsidiary. We're still able to manage that very well. And a number that people often equate to EBITDA, we had 22% margin. And we had our depreciation was also as a percent of sales with the big rise in our revenue. The depreciation, which you've indicated is kind of a more normalized level, was 37% of revenue. We think that's very reasonable for, especially when we compare among our peers. And we did show a couple cents loss on our net income. Some of that was due to a foreign exchange loss related to a loan we have denominated in USD. But kind of when we look at the structure of the company, we're not too far from break even, and we're making some really strategic investments that we think, along with what we're doing in AI, will really get the company to a place that's going to be, we think, very enviable in the industry. The combination of really taking our, what we call our core business, which is focused on data center infrastructure, and reorienting that towards AI. And we're being very cautious in terms of what we're saying, but when we demonstrate results, we're going to very much be able to, we think, show some very good numbers. As Sheldon indicated, these numbers are much bigger than we've had historically, and even 10 megawatt investment related to this prefabricated data center, where we have a memo of understanding to acquire, is very, very significant. And then as we look to the digital asset, software and services that we're focused on, what we call our Core Plus, with systemic trust, with Terra really enabling carbon neutral, regulatory compliant Bitcoin ecosystem. We think that becomes highly differentiated part of the business, and that's another piece. We're really proud of what we've done, but we have a lot of work to do because we need to onboard a lot of customers throughout the rest of the calendar year. And those combined, for us, we really are excited about the opportunity we have. And for us, Sheldon and I, this is really now about execution and showing you the results.
Yeah, it's a good set of results. I went through them when they came out, and I picked up a couple of things. And you've already mentioned about the depreciation there. That's a 37% representation of your actual revenue. So that's a significant charge. It's not a cash cost, but it still is a charge to, obviously pay for that investment in infrastructure and machines that you've been utilizing over the last period. It's funny, we talked this week on the podcast about the value of the HODL, and I looked today at DMG, and your HODL is valued more than your market capitalization, which, to the untrained eye is sounds like a real positive. And then you look at all your assets on the balance sheet, and your net book value is twice the amount of your market capitalization, which is, I don't think there's another miner out there that has a positive net book value versus capitalization. Some are close, but you're double your current market capitalization. What's sort of like what are the analysts saying, in terms of, how the market perceives, DMG? You run a tight ship. Your G&A costs were low compared to literally every other miner out there, but what is this sort of like, why is this gap between, your value of your assets versus, the market capitalization?
That's a great question. I'll let Stephen take part of it, but one thing to pick up on is we now have 3 analysts, so I think that's going to help. Not a lot of people know the DMG story. We are a smaller player in Canada. We aren't U.S. listed, which may impact this as well. I think everybody that works with us at IR say it does. And so I think there's a little bit of the story not being known. But as you kind of picked up on the execution of what we do and how we operate, sort of our level of care around shareholder investment into us, so, purchasing our stock and how we spend their money, we really care about. We're very cautious. As you can see, we don't splash out and do, very cowboyish type of things. We're
No planes.
yeah, and so our story takes longer, but I think it's a safer, stronger story.
Yeah.
If I put it that way. And you can see just from our opening comments, like we have some really strong stuff going on. We've always made good cash flow off of our Bitcoin mining. We've never gone crazy on the amount of exahash we have. Our pivot into AI, it's not really, from my point of view, a pivot into AI so much as we were always talking about and looking at high performance compute for Christina Lake. Years ago, we looked at how to get multiple fiber lines in. Years ago, we put in a radial feed into our power lines, so we were fed both ways, and so we wouldn't have a problem with getting the transmission power to us. It's something we've been working on. The market basis for going into AI really just appeared in the last year. And so if I was 2 years ago when we were concluding a lot of the things we were doing on the fiber and the power, to start talking about high performance compute, nobody would have listened to me or cared. With ChatGPT coming out and people understanding the value of it and it being ingrained in what people do and how they work, now everybody cares. And, we're really started on this a while ago, a few years ago, from an infrastructure point of view. Now it's really about an operational point of view, turning it all on. So I think we're a bit ahead in that. And that story is just not known. And we're aware of that. And Stephen and I, before we came on with you, kind of talked a little bit about how people don't know our story. And we're probably not the best at getting out to the entire market. And it's just something we need to work on and improve.
No, of course, and just to add to that, it's just the DMG story. We're very proud of what we've done. We just think right now there's a confluence of just the market not necessarily favoring Bitcoin mining, not necessarily rewarding increases in hash rate, and really wanting to see some demonstration in AI, not just to do necessarily cloud contracts or short-term enterprise contracts, but something much more substantial in terms of really having an AI strategy that's multi-year, very high value. That's the path we're taking. We're taking a differentiated path to focus on Canadian government contracts, really around this idea of data sovereignty, and also working with the Indigenous bands in Canada. So I think when you combine these ideas in terms of where we can get some differentiation in AI and the type of revenue we can be able to draw, I think the stock will reflect when we actually start to demonstrate the results. We talked about at the end of our call yesterday, just the catalyst that we see going forward. And it's really turning these MOUs into definitive agreements with regards to what we're doing in AI. We have with the 10 megawatt prefabricated data center. We have also with our 30 megawatt joint venture with the Malahat Nation, and also showing customer traction with both Systemic Trust and Terra. So I think it's all of these things that we've been talking about for a very long time that the market wants to see. The fact we're at 1.8 exahash versus under an exahash just a couple quarters ago, it's our view the market really isn't caring. And clearly, HODL, which was in when we saw the big lift in Bitcoin pricing post the November election, that lift is over. We know that. And so, yes, that was helpful, I think, for the market. But right now, it's about taking our strategy forward in the direction we want and getting to a place where investors are going to care more.
Absolutely. I mean, I look at another metric which is quite useful for you guys as well in terms of, another valuation metric. I look at your hash rate as a cost valuation versus from the value for each hash rate. And at the moment, you're showing 4 million per exahash in terms of the valuation, which is just ridiculous. I mean, CleanSpark are the only other pure play miner out there at the moment, and they're showing 44 per million per hash rate. So your hash rate at the moment from a cost perspective is valued 10 times less than CleanSpark. And then if you start looking at those with HPC, there's an argument that we should sort of remove that from the equation. But there's some companies that I think even Terra will for 233 million per exahash. So you do run a tight ship. I mean, I've certainly been chatting with Sheldon longer than probably most of the CEOs in the space. We spoke to each other probably about 4 years ago when I first came into the space. We had a long conversation. I remember it was a few hours, Sheldon, and we covered everything. And since then, I've certainly highlighted your knowledge in the space, the fact you're probably one of the longest serving CEOs of a public mining company, and the fact you had experience well before that, and supported a lot of other companies that are out there today, and wouldn't probably be as out there as much if you hadn't done that. So this year's obviously the big change, and you've highlighted the fact that these other revenue streams will start to appear. So having that base of a good mining business and then attracting these other revenue streams, especially since that you quite rightly highlighted the hack, the 1.5 billion hack recently, and how I'm assuming now that potential could drive customers to you who want that added security. Is it a case of are you having conversations with financial institutions or companies out there that are keen to move into the Bitcoin space and look at having that additional security at the moment?
Yeah, I mean, we have a CEO for that business for Systemic Trust, which is Lawrence Strong. I mean, he leads all of that, but there's definitely a lot of attention on that. And it's not just Bitcoin miners and crypto holders. It's, financial institutions, it's private offices. I mean, the list goes on of people that are really looking at this from a security point of view. And traditionally, if you think about it, when you're a Bitcoin miner, you have Bitcoin or other digital assets. Normally, you would just sit them on an exchange wallet, which is sort of a hot, cold intermixing, depending on what the exchange is doing. But none of it's really regulated into a digital custodian, which is a completely different world of what they have to do and what security they have to have. plus the insurance they have to have that, if something does happen to them, you actually get dollar for dollar your money back in Canada. Not the same in the US. And Stephen and I know a little bit about that. So it's not the same in the US where a qualified custodian, depending what state you're in and the regulations, you may not get dollar for dollar back if something happens to that custodian. And Prime Trust is a good example of that. And there's a few others. But for STC in Canada, I think that we're seeing a lot of people that maybe were only smaller Bitcoin miners or people that had a small amount of digital assets that are really looking at, should it be at this crypto exchange or should it be in this private wallet company? Should I keep it on a Trezor myself, or should I move it to a fully insured and regulated digital asset custody company? One of the things that we've integrated into Terra Pool is, if you join Terra Pool, you automatically get an account with Systemic Trust. It's up to you if you want to use it or not, but all of your payouts could go right into the trust account. And then that at least the payouts you get are fully insured and safe. Now, what you do afterwards, or if you opt not to use it, that's your choice. But nobody else is offering that, and we think that that's something that other pools may want to follow as well, because for the average Bitcoin miner, most of them don't want to pay for digital trust insurance, but it's an added benefit that we give in Terra Pool.
Super interesting. And that was actually the topic of a number of our discussions down in New York last week as we talked to investors, financial institutions getting involved in the Bitcoin space. Now, the follow-up question there, and we'll come on to some of the AI stuff in a second here. You mentioned the Core Plus division really on the bleeding edge. Anthony and I talk about this a lot on our podcast. If there's anything new and innovative going on in the Bitcoin crypto space, usually you guys have a pretty good handle on it. Of all of these initiatives in 2025, which one do you view as the biggest potential revenue opportunity?
Well, again, I think the biggest revenue is going to come out of Systemic Trust. I mean, it has the ability to grow and expand astronomically. There's just so many digital assets out there. So the team there has a big job ahead of them to bring in as much business as they can. The dollar signs behind that are always a little bit hard. It is a market that people are fighting over market share. In Canada, there's 3 digital trusts that are fully regulated. So, we're one of 3 looking at Canada, but that doesn't preclude us from doing anything in the States or internationally. So, we can go and do business with virtually anyone that wants to come to us for business. I think behind that on the software side, as Stephen alluded to with Terra Pool, pools themselves aren't great revenue generators, but things you can do with pools can be great revenue generators. So, you may remember the time of the ordinals where, when ordinals first came out, we did very well, placing some of the largest and first ordinals out there. That business is still around. It's not as big as it used to be, but you never know what's going to happen with the blockchain, and there could be resurgence. But outside of the idea of ordinals, the idea of having a pool is that you can custom build the block space. So, one thing we want to be doing more of is working with finance institutions to move their transactions around as they start to move deeper into Bitcoin, so that we can, custom build blocks where all the counterparties are known from a KYC and AML point of view. And we think that has a lot of value for institutions, because one of their fears of Bitcoin, in specifically, is that they would be doing business with bad actors. But with the combination of Terra Pool, with everybody KYC'd and AML, and the ability to move it carbon free, all of your transactions, which is important to some institutions, but not all, but it's a benefit, as well as us being able to pick and choose what goes into a block. We can push out transactions that are OFAC sanctioned and things like that. I think it's unique. Nobody else is doing this. And I think that that's going to be a future area that will grow revenue in. And on top of that, with the way we put the way we are putting Reactor, which is a company we purchased a few quarters ago. Reactor is basically a way to ensure the delivery of hash rate on hash rate contracts. So there's a whole brokerage market out there buying and selling hash rate. But nobody's really automated the delivery and checks to make sure that all that hash rate is delivered properly. The way we're putting Reactor into Terra Pool now, it can stand alone, but it would be seamless if you're a Terra Pool customer to both mine Bitcoin, to be able to get it onto an exchange like through our partner with Bosonic, to hold it in a qualified custodian, which is STC, and then to be able to future sell it by you can sell and take coins up front through Reactor. So, and on top of that, we have Helm, which manages your mine and all your efficiencies of all your miners. So we've created this whole infrastructure and ecosystem that we think is really interesting for crypto miners, because normally you only get a piece of it. You only have a pool, and then maybe you go to somebody else for the tool to manage, or like a foreman type tool to manage it, and then you go somewhere else to custody your coins, and all of these things are fragmented. And we kind of pulled it all together and said, well, you could log in here, put your miners here, control your miners here, move your coins here, sell your coins or buy your coins there. All of that we really worked hard to put together into one simplified system, SOC 2 compliant, as well on all of our software. So for public miners or miners that really care about security, that's another benefit of what we've been building.
It's interesting you mentioned that one-stop shop type of infrastructure that you have there. I remember when DMG were a host miner, going back in the day. Is it something? I mean, is that a business model that could come back in? We've seen a number of miners have really been really effective using the hosting concept. We've got the likes of Hut and BitDuy have been doing it really, really well, especially during the bear cycle, because it gives you sort of like more of a fixed revenues coming through, rather than having the volatility of Bitcoin. And with you providing everything else in the service there, is that something that you'd even consider, or do you think actually you want to focus on some of the areas that we'll probably discuss going forward?
Yeah, I don't. Go ahead, Steve. He'll say the same thing as I do.
I mean, we're really looking forward. With hosting, we've been there, done that. Not our favorite business. With our strategy looking forward, maybe we'll have colocation services for AI. That's clearly an area, but we don't even want to use the word hosting. We just kind of refer to colocation. When we think about colocation, it's really about AI going forward, because that's kind of an integral way that the business model is executed, because those who want the compute power may be the ones who also purchase the GPUs. We get that. So we're definitely not against that. And especially when you look at the types of revenues and long-term cash flow stream, that's what's really exciting. In terms of the software, this is really about building this ecosystem. And this has been this whole idea of how to monetize Bitcoin transactions. That's been the goal from the start. And we realized over time that we needed additional pieces. We think we have all the pieces necessary, but it's not just about having the base pieces, which are systemic trust and Terra Pool, but it's building a moat around it. So with regards to Terra Pool, it's having this data center infrastructure management, or DSIM, capability. And we talked about on the call, our vision for DSIM is much more than just about being able to find bad S19j Pro and be able to swap it out. This is about maximizing profitability, supporting demand response programs, and being able to interface with multiple types of APIs from different providers that enable automation of demand response, having inventory management, being able to deal with both air-cooled and hydro miners, really having a world-class tool. One of the things that we have a really good software team, and they're building a product that when customers are actually going to try it out, they'll be surprised. If they're used to a product, if they've been using a product like Foreman, they're going to say, wow, this thing is like so fast and so responsive. And we're doing that very purposefully. It's not like we're just trying to just put together some pieces and hope it all sticks. We're being very thoughtful about how we really gain competitive advantage. We also talked about on the call kind of what you're hearing about the whole software space in general. If you're like kind of a mid-level software developer, your value is dropping very quickly because AI is writing the actual code. And we're doing the same thing. We're focusing on architecture. We're focusing on the ability to have just have a really good user experience and everything in between. And we're letting the AI tools essentially write the snippets of code that are allowing a very small team that doesn't necessarily need to grow be very productive. And this is how we can build these products, but we're being very targeted about our use cases, really going after the larger miners that can help us put together this ecosystem and these larger financial institutions on the systemic trust side, along with Bitcoin miners that would want to take advantage of having custody as part of the package and really putting something together that's unique. There are other people who are doing other kinds of things, such as firmware. We're not really interested in that. We think longer term with the move to hydro, that becomes less important. And it's really about having some key pieces that we've thought are most important. Just having the carbon neutral pool, having the infrastructure management tool, and really focused on maximizing profitability. That's really the ultimate goal. Having products like Reactor for treasury management, and then having the trust to be able to hold your coins and know they're going to be safe. So these are things that we're placing our bets and saying, in the future, this is what the ecosystem is going to need. And financial institutions will naturally gravitate to us, not just because of the regulatory compliance, but also we do believe having a carbon neutral option is something that people will take advantage of. And it's not just one piece, but all of these pieces. And it's not like we just decided yesterday we needed all of these. This has taken us a long time to figure out. And so this is kind of where we're at in terms of that, all those software pieces. And I know that's covered a lot of ground, but we're just very excited about what it can do here in this coming year.
No, it is exciting to hear all these pieces coming together. It's also interesting to hear how you're harnessing AI within your business. We talk a lot about AI creation, the infrastructure, but actually harnessing that to help with the code internally as well. Now, you mentioned earlier your agreement or MOU with the Malahat Nation. This is a 30 megawatt AI HPC joint venture. Can we get an update there in terms of next steps, where these megawatts are going to be located, and potential timelines towards revenue on that front as well?
No, that's a great question. So the Malahat are a great partner. Just for anyone that doesn't know sort of who they are or where they are, the Malahat are on Vancouver Island. They're about a 30 or 40-minute drive north of Victoria, which is, British Columbia's capital, where our government sits, our provincial government. They have huge industrial land. In that territory, they've set aside an area for us to build out their 15 megawatts. So we've agreed to split the 30 megawatts between DMG and Malahat in the partnership. And the reason for that is that, in Christina Lake, we can stand up and operate 15 megawatts a lot faster than the Malahat, because we already have power infrastructure there. We have people there. We have lots of land there. We have, all the things we need to move quickly in Christina Lake. On the Malahat, there's some infrastructural improvements we need to do. We've already taken care of the fiber. We're working on the power, which will take a little bit longer. It's greenfield, so it's going to be a new build. Christina Lake would be an additional build to what we have there. So it's going to take a bit longer there, but the commitments there from them and from us. One of the biggest things that Malahat's helping us with is the offtake agreements. So nobody wants to go and spend tens or hundreds of millions of dollars without a client. And this is a little bit different for Bitcoin miners. So, we have a client. It's the Bitcoin protocol. We've talked about that before. You put on your hash rate, you get paid for it. In AI, it's somebody has to purchase that output. And since the numbers are so big, it's very risky just to build it without a customer. So the Malahat have been spending most of their time with us on finding customers. And those customers, as Stephen alluded to, we're looking at Canadian government because, they're a large purchaser of services. But there's also industrial customers out there, so enterprise level customers as well. And we were surprised with some of the relationships they have. So they're not new to the world of information technology. They do use it currently in their operations. So we were surprised that they actually had not a bad server room doing a lot of interesting things already on their territory, around forestry and fishing and water usage and so on and so forth. So, pretty up to date people on resource management and using technology for that. They're a great partner that way. I think the main message is that Malahat itself, it's going to be a couple of years before they're up and running 15 megawatts. DMG, probably we could do it in a year, but before we really do anything, we need to make sure we have an offtake. We can throw the 10 megawatt pre-build. That could end up anywhere. I mean, that all depends on how things shake out with the discussions we're having with different, companies and government officials.
So in terms of the obviously the two separate AI projects, it sounds like now actually the 30 megawatts, from what I'm listening to you, 15 of that will be at Christina Lake and 15 will be elsewhere within their industrial part of their land.
Yes, that's our intention.
Yeah, and I mean, I mean, as a joint venture, what roles? I mean, it sounds like you. I mean, it sounds like you're doing your own 15 megawatts. They're doing their 15 megawatts. I take it there's different skill sets brought to the table to make that joint venture sort of a viable.
Yeah, I mean, it's another good question, and we've talked about this a little bit before in some of our calls. Operationally, DMG will be doing a lot of the work, the working with the general contractors, constructing, working on the supply chain for all the IT equipment, things we know how to do.
Yeah.
And so the Malahat, why are we partnering with them? What are they putting into this besides some space on their territory? There's a few things that are really interesting about working with the First Nations, and we get that maybe for companies outside of Canada that may not understand Indigenous bands and how they operate versus in the U.S. or other parts of Europe. First Nations bands have the ability to get low cost financing. So that's really important when you look at the cost of putting in, not 10 million, but 100 million plus 200, $300 million. If you're doing it at, I don't know, pick a number, 8% interest rates, versus, with the Malahat, we could be at, between 4 and 5%. That's a huge savings right there. So there's an economic benefit just in their ability to borrow money to the benefit of our joint venture. So that's a great thing. They also have the benefit on GST and PST. So we have this state and federal tax. GST is the federal one, is 5%. PST is the state one, or the provincial one in Canada, as we call it. It's 7%. And so they're exempted from these things, they're passed through, so they get it all back. So when you're buying $100 million of equipment, and you would have the 7 plus 5 added together, so you've got 12% additional cost on $100 million. Well, that's gone, and so that's savings to the joint venture as well. So these are great things. They have the added benefit that they have their own tax structure, so they're not taxed. We are still taxed, but it's there are some great tax efficiencies and all this. And then the other piece that a lot of people aren't aware of is that Indigenous bands have the ability to go after federal contracts with some rules around how Canada wants to spend their money. and they favor giving a certain percentage, not 100%, but a certain percentage to Indigenous bands as part of their reward system. And so when you look at the amount of dollars that are planned to be spent in the world of high performance compute from provincial governments or from federal governments, and you just sort of like take 5 or 10% of that, that number is huge. And that's kind of the number that they help us go after because there's a mandate to try and work with Indigenous bands on federal and provincial spend. And so you kind of put those things in, so they're not like concrete building a site and giving it power and putting a GPU in, but the business side of making this a little bit less friction and simpler to do, and economically the impact would be greater to us is quite palatable. So, you know, there's a great benefit to working with Indigenous bands in Canada.
I'm assuming that I mean, 30 megawatts is a significant amount. It doesn't sound a lot from a Bitcoin mine perspective, but from HPC, it's a significant amount. We've seen some of the other miners have like 2 megawatt projects, which are a significant size. Based on the fact that 30 megawatts is a large size, I'm assuming you're looking at sort of more of maybe a hosting opportunity for clients to come in and put their own GPUs in there, because the sheer cost of filling 30 megawatts with GPUs is going to stretch you all the way up to that sort of 100 million in terms of cost. I mean, we're already seeing what miners are spending filling 2 megawatts, and you do the multiply that by 10, and you get a significant amount.
Yeah, well, Anthony, you know, it depends. I mean, you shouldn't assume it's just going to be hosting, because with the Malahat and with the federal government, we may very well get some agreements that may be such where we can get financing. And they will rely on us to deliver a certain amount of GPU power over a certain amount of time, and that'll be the agreement. This is why we're saying we don't know if it'll be us buying GPUs or colocation. It'll be based on low-cost debt financing. So it'll be non-dilutive. It'll be long payback period. That's similar to what the revenue stream is going to be. And this is partly why we're excited. And I think the analysts too, as Sheldon mentioned, there are 3 analysts now covering DMG. They see this also in the DMG story, is if we can really bring this to fruition, whether it is co-location or we actually own the GPUs, it's a very significant opportunity. It's the right kind of opportunity. It's not a 2-year contract where who knows what'll happen after that, and then you're kind of stuck with GPUs where you have to find other customers. The market may be very different. We're looking for longer term contracts that really, and at a premium. And, you know, kind of given the current geopolitical environment, we believe that gives DMG a really good opportunity as the Canadian government is looking to be able to rely on GPUs that reside in Canada. That also, we think, is a catalyst for us to be able to get business in the relatively near term. But just because of the scale, just kind of when you look at DMG's current asset base and DMG's current market cap, you shouldn't assume that it'll just automatically be co-location, because it really depends. And we're very well positioned now, having this 10 megawatt asset and also having a site that's currently operating and a site on Indigenous lands.
Yeah. I mean, I absolutely. I'm just looking at the models that I'm seeing out there at the moment, and actually, you know, you have some miners that are using their own GPUs, and we can see the revenues coming in from that. We know what they've spent on the GPUs, and we're seeing the revenues coming through that aren't really anywhere near what the payback seems to be quite a long time on repaying back the GPUs. Whereas you've got a couple of contracts out there already signed up for hosting, and they look really, really good contracts to sort of, you know, in terms of margins, I mean, the margins on the hosting ones is, across the whole contract period was like 71% for one company, and the other company wasn't that far behind either. So, it seems that, that type of a contract on the face value looks to be really lucrative. Again, with a demand model, you've got to rely on getting a significant demand for your services. So, even in the UK, we have HPC, and I'm speaking to companies out here, lucky to get 80% demand for the services at the moment. So it's not running at 100%. And even speaking to some of the miners in Texas who are using HPC, they ain't getting 100% either. So, that was the reason I asked that question.
Yeah, this is not a homogeneous business where it's not like Bitcoin mining where you say you have a certain amount of exahash. You just said the Bitcoin network generated 60 Bitcoin per exahash in the December quarter. Everybody more or less gets the same for the realized hash rate they're selling to pools. That's so it's very homogeneous. And I think people need to get used to the fact that not all AI contracts are created the same. One's AI contract, they may be operating at 40% utilization. They may be utilizing older GPUs that don't really command much of a premium. And if you're just selling to the cloud or selling through these essentially third-party distributors for finding GPU demand, the margins are substantially different versus if you have a direct relationship with government entity, especially a government entity, as well as it could be an enterprise, one of the hyperscalers. This business, I think investors are going to need to learn kind of who has the right kind of contracts, and that's really what we're going after, or the right kind of contracts. And we think that just as we've said, the timing is such that we feel we're very well positioned to now capitalize on that.
That's great. Hey, now speaking of timing, I know we're at the end of the hour here. I did want to give you guys a quick opportunity to close out and provide an update on the self-mining component. I know you have a target of 3 exahash and some hydro or liquid to cool chip upgrades going on in Christina Lake. So maybe just a quick comment there, and then your closing thoughts, upcoming catalysts ahead.
Yeah, I mean, on the mining side of the business, everything's going well. We already have 1 megawatt of direct liquid cooling or hydro mining operating in Christina Lake. We bought 6 megawatts of equipment. The next megawatt should be up shortly. The machines are being flown in now. And then shortly after that, we'll have another 4 megawatts up and running. So far, we were reticent about going to hydro. We initially wanted to use immersion, and that's something that I was familiar with during my Bitfury days. Something that we did some studies on. We ran some immersion ourselves, small scale. But after kind of seeing a few iterations of hydro and seeing what's going on also in the AI market and where they're going to get a high level of compute and how they're cooling their chips. We decided to try the 6 megawatts of hydro. The first megawatt has been running for a while now, and it's working quite well. And the cooling's working well. Obviously we're in the winter months, so we'll see how the summer months go. But we have 1 meg of chips running, but we're only using 500 kilowatt of the cooling capacity. So we're using about half of it. So we think in the summer months in Christina Lake, we shouldn't have any real heat issues. Obviously, we'll learn that in a few more months. But the other thing that we're looking at is as we look at moving our older fleet of GA Pros, and so we've moved some out. We're looking at, we kind of announced that we've been finding hosters for some of our equipment, sort of as it's heading into the end of life. We're looking at putting hydro inside the building. So that's something we're looking at right now, where we would have dry coolers outside, the equipment inside. Right now, all of our hydros outside containerized. And so this could be a very low-cost way for us to move a lot of our inside air-cooled into inside hydro-cooled. which would be a great use for the building. There was a thought that maybe we could repurpose the building for AI, but as we got deeper and deeper into the analysis, it looks like it's better for us to start brand new with a brand new building. And when we look at sort of our cost basis with refurbishing what we have. So most likely the life of our building inside our building in Christina Lake that's there right now, the 30,000 square feet, will become a hydro building with containers in the back that are hydro and air cooled. And obviously we have 30 acres of land, so we have a lot of room to build additional buildings for AI.
I was going to say, in terms of that immersion cool study that you talked about, I remember reading that study a few years ago and writing about it. I think it's still the most up-to-date study out there on immersion cooling because I've seen absolutely nothing from the miners who are using that technology in terms of letting the retail investors know how well it's going. We constantly ask a number of the miners who have got hundreds of megawatts of this in their facilities, and they still haven't provided any real information other than the fact that our monthly update shows us what we're mining, but nothing about the ability to underclock, overclock, how it works in different temperatures, etc., etc. But
yeah. That's true. I mean, great memory. I mean, we did a study
yeah,
that we shared with our utility and with others that asked for it, and it showed the miners both. So we had them in a tank, and we had them air cooled right next to each other, and we showed the efficiency gains of immersion. By the terahash, by the kilowatt, however you want to look at it, the heat change differences and everything. And kind of how we got our efficiency gain by going to immersion. We've also done 2 power studies on power quality with mining equipment, which we released to our utility and multiple utilities that asked for that. There's very little information, at least in the early days of crypto. I don't know if other companies are doing it. We don't really hear about it, but there's very little information for utilities to understand the impact of a crypto load on their network. And people think that power just goes in one way and it gets burned up and disappears. It doesn't quite work like that. So power has a balancing effect. And so there's a lot of harmonics that happen and different things that happen that the utility needs to be aware of and understand. And your equipment needs to be able to properly manage. And so we were at the forefront of doing that, with multiple studies. And we haven't done anything on hydro. Maybe we should do something on hydro. I'm not sure, but yeah, definitely. We are a company that has been very open about the studies and information we've done in the past.
Yeah, and we said in terms of going to 3 exahash, the industry may very well go through a restructuring period as we look into the back half of the year, and just kind of given the economics of Bitcoin mining, how the markets are rewarding Bitcoin miners or not rewarding Bitcoin miners for fleet expansion. Our goal has been to stay current, to grow our hash rate, to be similar to the network growth. We didn't grow for a while, then we stepped up, and we're kind of back in the track where we want to be. We have, in terms of the depreciation component as a percent of our overall revenue, in a much better place. So we're in a good place now. We kind of want to keep that going forward. Adding this additional 5 megawatts is going to keep us in the short term. Longer term, we're clearly going to need to keep our fleet current, and we're just going to evaluate based on where the market is as we go through past the middle of the year. We're going to continue to reevaluate that.
That's great. Like I said earlier in the conversation, you guys are always on the leading edge here of innovation technology. It sounds like 2025 is really the year these pieces all come together and start producing revenue for the greater business. So looking forward to continuing to provide updates as these press releases come out. We appreciate your time today, guys. Thank you so much for stopping by. If you have any additional questions for the team at DMG, let us know in the comment section below. Feel free to subscribe, like, and we'll see you back here tomorrow.